Hello and welcome to Dialogue. Despite the concern from the global community, U.S. President Donald Trump has announced sweeping tariffs on nearly every country in the world. Economists have warned that this is the most significant escalation of U.S. tariffs in nearly a century, and the move will dramatically increase the U.S. consumer prices, weaken the domestic economy, and could even cause devastating effects for global trade. What is the purpose of the piling tariffs against the world, and how should the rest of the world respond to the U.S. tariffs? And what could be the fallout for the U.S. and the global economy? Join us for our discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Radhika Desai, Director of the Geopolitical Economy Research Group, Jing, attorney at GEN law firm, Anthony Chang, former JPMorgan Chase chief economist, and Dr. Eduardo TziliApango, associate professor of the Department of Politics and Culture at Metropolitan Autonomous University. Welcome to the show. So Radhika, I will start with you. These numbers, most people would say, oh, it's probably higher than expected. In China's case, for example, 54%, some of the Asian countries around 50%, like Vietnam, Thailand, Laos, Sri Lanka, etc. So are you surprised with these numbers?
Well, to some extent, although we have to bear in mind that Trump has essentially signaled that this is his initial move. And now he expects all these countries who have been hit with tariffs, and you're absolutely right, China and generally the East and Southeast Asian region has been the hardest hit, because it's also the region that has the biggest trade surplus with the United States. Trump has essentially signaled that, okay, now come and talk to me, and we will renegotiate trade. So that's what he's trying to do. And as you know, they have used some sort of formula in which the tariffs are proportionate in some fashion to the trade surplus of the countries concerned. So to me, yes, the size of the of the tariffs, the scale of the tariffs are surprising to some extent, but in another way, it's not surprising. And remember also that he has also left the door open to how long they will last. There will be cries of pain very soon from within the United States, both from consumers as well as corporations. So in response to that, exactly, Trump is keeping all his options open.
Well, Jing, of course, China is one of the chief target of the U.S. tariffs. You think for the Chinese side, the Chinese government, do you think people are prepared for this?
I do think so, because this kind of discussion has been going on for a while. I think people rather not believe it. But I think our government has been prepared for it, and also lots of companies, enterprises are also taking all kinds of measures prepare for it. But whether sufficient or not, we have to wait and see. Okay, and I think for me, when I see the numbers, I'm actually not that surprised. And I think right now people always talk about the tariff. We talk about tariff as a weapon, against some countries. But I think Trump is really using this tariff as a way to build the walls, really build the walls. If you're looking at the U.S. right now, following on its own philosophy, whether it's, America Great Again, or the policies about moving the manufacturing closer to the U.S., I think what the Trump administration 2.0 is really doing, this is a gigantic wall around the U.S. It's like building this Roman castle. The old saying is every road leads to Rome. But right now, for Trump administration, they're building this big castle. The gateway is closed down. The portcullis sort of crashing down. Now he's opening up the big game of the negotiation. He's basically saying, hey, come negotiate with me one by one country by one country.
Okay.
So for China, obviously China is a target.
So it's more like a tactic rather than the end, he pursues by imposing tariffs.
Yes. Yeah. I think he knows. His advisor advised him, say, hey, we got to have a trade eventually. Otherwise, how you can collect the money. Right? I think it's really to rebuild the whole dynamics for the whole world trade. and the politics.
Anthony, so I guess you understand better about this the rationale behind the tariffs, sweeping tariffs basically against everybody, including Australia. Actually, the U.S. enjoys a trade surplus. How does people justify that kind of 10% tariff on Australia? But anyway, so Trump is anticipating national leaders to give him a call and then start a negotiation and secure concessions from other countries? Is that the case?
Yes, I think that is the overall strategy out there. I do agree with my colleagues that at this point, no one should be surprised when these announcements are made, because the goal of these announcements are basically to eliminate the trade deficit between the United States and other countries. The problem with that argument, as everyone knows, is that the trade deficit is not something that's terrible.
Okay, seems there's a...
And so it's sort of like a game of whack-a-mole that you try to lock up or reduce the trade deficit with one country, and it generally leads to an increase in the trade deficit with another country. Now, we're going to do this with tariffs, which increase the prices of these goods. And so it's ironic that one way to reduce the trade deficit is by slowing economic growth in the United States, which is what happens when all of a sudden you have tariffs and prices of goods arise. U.S. consumers will be able to buy less of those goods. Economic growth slows down. And of course, the trade deficit goes down, but it goes down for the wrong reason. And that's important to keep in mind.
Slow down for the wrong reason. Let's take a look at, basically, on individual countries or blocks over there. So, Eduardo, if you take a look at the list of the countries, being imposed with tariffs, Mexico, Canada, they were not on the list, but still, there's a 25% tariff. So what is the mood, from the government, from the public, or what is the strategy to respond to Trump's tariff here?
I think that from the part of Mexico, the Mexican government has negotiating in a very hard way with the U.S. government, because both countries have a lot of interests in common: migration, drug traffic, and so on. So I think that is why the U.S. government has paused for the moment many of the tariffs, of course, invoking the free trade agreement, right, between the U.S. and Mexico. But the tariffs will harm Mexican economy also, because we live in a very interdependent, very interconnected global economy. And it appears that this moving is pressuring world economy to reorganize in some form of regional blocks. Mm-hmm. And but the problem is that in the case of the North American bloc, it's not clear if the road is going to that way to form an economic regional bloc like in the times of NAFTA. So we are apparently still in the negotiating phase, in which Mexican government is trying to reduce the tariffs to a minimum, mm-hmm. so the economy will not get a very huge hit.
Yes. I mean, obviously, if that's the way to go, I bet countries will negotiate with the U.S. Anthony, get back to you. The problem is, like, if you look at this trade agreement between the U.S., Canada, and Mexico, Trump himself signed up to the agreement, and he broke it. Now the problem is, like, if other countries talk to Trump and sign an agreement, and what if he changed his mind again?
Well, that's always a risk, and that's why these trade situation is so volatile, and that's why the financial markets are behaving the way they have behaved. As you saw after the announcement was made, you saw that European markets, Asian markets, in particular, the U.S. market reaction was immediate and clear. And keep in mind that the reaction of the financial markets, it's not Democrats reacting or Republicans. These are real financial markets with money on the line. So it's as clear as possible that the financial markets are basically expressing the views you just described. That even though this number, it may be terrible or may not be desirable, it could get worse or it could get better. And that uncertainty is not positive for the financial markets. And more importantly, it's not positive for companies that are trying to make long-term investment decisions when these trade agreements or trade announcements can change from one day to the next. And it certainly doesn't give enough clarity for these companies to make investment decisions. And that's not a positive development.
Radhika, of course, is there a possibility? I mean, as you talked about, the U.S. consumers will ultimately pay for the tariffs collected by the U.S. government. Is there a chance that, for example, there's one export here in China, 54% of the tariff, maybe some accommodative, step, like say, okay, as an exporter, I will take some 34%, half of the tariffs, and then the U.S. importer will take care of the half of the tariffs, 34%, 37%. In any way, the U.S. consumers will pay a higher price for goods produced in China. Is there a chance like that? We can find, like a concessions, accommodating way somehow the exporter and importer will cope with the tariffs?
Well, I think that there's two things you have to remember. First of all, for all the brouhaha about tariffs, etc., the most immediate thing Trump has done is he has imposed all these tariffs, but in a way in which keeps the uncertainty lingering. But the one thing we can be sure of is that these tariffs and the revenue they will allegedly bring to the US government will be used as a justification to give huge tax cuts to the rich in the United States. And I think this is going to be the first most important consequence and the most certain consequence of this. That is, ordinary working Americans will pay for a tax cut that will be enjoyed by a small number. Now, in the short run, the kind of accommodations that you are talking about will, of course, take place. Exporters, importers will want to continue their trade and they will do everything possible to continue it simply because, it's uncertain. But I would say that the long run effect of this is bound to be that more and more countries will shift their trade away from the United States and also the expectation that somehow, Trump says if you manufacture everything in the United States, you will face no tariffs. But just imagine, this guy has already subjected the world to so much bullying, so much uncertainty. Do you think that if you had an investment to make, you would go and invest in such a country ruled by such a president, which possibly he's now talking about a third term? And in any case, the underlying economic crisis that got Trump elected is not going to be resolved. So even if Trump is not the next president is unlikely to be much better than Trump. So in these circumstances, it's not like foreign capital is going to rush to invest in the United States. So in all of these ways, the US faces a recession. Of course, the world will also probably face a recession or certainly declines in growth. But as I think my colleague earlier was saying, the Chinese government is prepared. I think the Chinese government will let loose a stimulus, which will be good. I think that the world orienting away from such a crisis-prone economy will be a good thing.
Obviously, there will be some response from the Chinese side. As a spokesperson from the government already, said that China will take action against the U.S. side. Countermeasures are likely to be taken also by the EU countries and probably other countries too. We don't know yet, but obviously countermeasures are on their way. So tell us, briefly, Radhika, what will be the effects? Of course, on the U.S. side, we see consumer will pay more. Probably the inflation rate will go higher. What about the global trade? We are not talking about WTO. What are the rules? Do we need any rules at all now?
Well, I think that so you asked two different questions. Number one, the effect on the United States will be stagflation. That is to say, stagnation plus inflation. This is, it seems to me, very likely. The effect on world trade, I would say that world trade will continue expanding. If it is the case that these tariffs do, in fact, stop a lot of trade with the United States or make it very expensive, all of this trade will go somewhere else. And I would say that particularly chastened by what the United States has done, the rest of the countries of the world will actually work doubly hard to create a predictable set of rules around which, and the WTO is as good a framework as any. So they will actually work to continue expanding world trade in mutual agreement with one another. So I would say that the rest of the world will become that much more eager to stabilize the world trading system, leaving out the United States.
Well, Jing, you said that the Chinese government or Chinese side, including the entrepreneurs, the investors, probably they are, more or less prepared. So what kind of reaction will be? Countermeasures, is it sweeping? Are the sweeping measures or are the targeted measures probably on certain sector of the U.S. or probably more encouragement for Chinese investors to turn their attention to other parts of the world beyond the U.S.?
Yeah, I think you probably said all of that. I think our government has been quite strategic in preparing for this worst case scenario. I think our government will launch some very strong countermeasures in response to this tariff, because our government believes this is completely, those tariffs completely punitive, does not make any sense. And I think we will probably issue some very our trade controls sanctions against some special material, raw materials. Okay, maybe more tariffs on the rare earth material or some other raw material that probably U.S. industry desperately needs. Okay, so I think that's one thing we're gonna do, and China will also encourage, we have already done that, encourage our global companies going to other markets or deepen our research and investments in other key markets. And I think China will actually further open up by having more policies, investment policy friendlier to the foreign investment. And third, I do think our government will be quite open-minded in doing negotiation. I think every government is probably pragmatic. We're not going to take this as a pure insult. Okay, so a transaction is transaction, business is business. I think some negotiation needs to be done and should be done. Okay.
So you are saying basically the door to negotiation with the U.S. side is open. And do you think, what about the confidence? Do you think people are confident that, yes, we can reach a deal with the U.S. government and that deal will be carried out word by word strictly, so both sides can have a stable relationship?
That's tough, right? That's actually the big, gigantic question mark in front of everybody. Mm-hmm. And this probably is intended by Trump. Right? He's putting everybody in the big gambling game. Mm-hmm. I think lots of things will be on table. Like I said, he's building the castle. His whole game is about, opening up the new game. He wants to have this new paradigm on trade, on all these policies. So, this is probably a new time for everybody to learn.
Yeah.
Not a pleasant.
Not a pleasant one. Not a pleasant one. So, Eduardo, we know that there is a Chinese investment in Mexico, and I guess, according to the media reports, through Mexico, they will produce stuff, and then be exported to the U.S. market. So, to what degree that kind of a process will be affected?
Yeah, well, that process is already been affected by the tariffs. For example, the BYD firm has announced that it will change the destiny of its investment, $600 million USD from Mexico to Peru, and that investment would be building a factory and promising 10,000 employees. So that has changed. And that's a sign for me that the tariffs are affecting already the course of investments in Mexico, and that's a big problem for the Mexican government, because the Mexican government is searching for nearshoring opportunities, is searching for investment to develop this very focal geographical center that the Mexican government is trying to develop. So the tariffs has promoting, I think, an economic earthquake in the world, and in Mexico in particular, because I agree with my colleagues when they say that these movements are a media to an end, to a political end, particularly, and to geopolitical ends, of course. But in the case of the Mexican government, because we are very close to the U.S. and because we share many common interests that are beyond economics, like migration and drug trafficking. So for us, the situation is a very delicate one. And we are experiencing already the effects, the spillover effects of the tariffs, even though that the tariffs are not applying directly to us, or to many of our products.
Losing in the sense some of the benefits there. So Anthony, U.S. Treasury Secretary Scott Bessent said, suggested, countries should, quote, sit back, take it in, and let's see how it goes. Because if you retaliate, there will be an escalation, end quote. What do you make of his remarks? Like basically everybody calm down, receive the tariffs as they are, and don't resort to any, retaliatory measures. Will that be the case?
That is not going to be the case. And you've already seen reactions from Canada, you've seen reactions from Europe, and you've seen reactions from China, basically saying that they are going to retaliate. This is the same message that we heard before the tariffs were started, in which they said, well, we can impose these tariffs because no country around the world is going to retaliate. We get it over with. The reality is that tariffs, whether they're imposed in 2025 or whether they were imposed when the Smoot-Hawley Tariff Act was imposed in the 1930s, you always had a reaction and you always saw countries basically retaliating. It's simply the reality of how these things work. So that is one of the reasons why the financial markets have so much uncertainty, because they know that there is going to be some retaliation, and the retaliation is going to be met by further moves, which could be the beginning of a potential global trade war. Or if somebody backs down, then of course things get a little bit better. But so far, the indications are that neither party, the United States or other countries, has any intention of backing down. So yes, you can hear those words, and they're pleasant in the sense that it tends to generate a de-escalation. But the reality is that's not the way things work.
Well, Radhika, the Trump government's stated goal is to shrink the U.S. trade deficit as well as bolster its domestic industry and competitiveness of the U.S. manufacturers. So basically, reindustrialization at the same time, they will make sure there is no de-dollarization. Is that achievable?
Well, this is such an interesting question that you asked, because I was just seeing that The Guardian has just posted a story that says that confidence in the dollar is going down. As you know, the dollar has been going down since yesterday's announcements, and now they're saying there can easily be a crisis of confidence in the dollar. So there are going to be so let me just answer your question systematically. Number one, the idea that this will lead to the reindustrialization of the United States is really pie in the sky. In order to do that, you don't need just tariffs. You need tariffs plus industrial policy. And the Trump administration has absolutely no industrial policy. Industrial policy requires controlling big business. But in reality, big business controls the Trump administration, not the other way around. So that's one thing. Secondly, these tariffs are going to create stagflation in the United States. They are therefore, that's not the best scenario in which you can reindustrialize any country. Thirdly, there is going to be, if inflation really goes up a great deal, there is also a further risk to the dollar. In the following sense, if the Federal Reserve decides to deal with inflation by raising interest rates, it could trick all the asset bubbles that have been inflating in the United States since 2008. They are massive today, and any big asset bubble crisis will lead to a dollar crisis because inflows of capital into the dollar financial system has been the critical prop to the dollar today. So, or if he does not deal with it, if he goes for a tolerates inflation in order not to prick the financial bubble, inflation will eat into the dollar. So either way, there's going to be a problem. And as I said, I think the rest of the world is already probably planning to move away, essentially disengage, decouple from the United States. That has already been happening to a great extent, and this process will accelerate. We are reading in the news that China, Japan, and South Korea have initiated a dialogue, and certainly given that East and Southeast Asia has been the worst affected, they have the greatest interest in doing so. But even countries like Canada, and of course the European Union are increasingly thinking about deepening their trade ties with China. And I think this process will continue because at the end of the day, the word transactional is used for Trump, but in reality, he's not transactional. He's a bully. He is a mafioso. He first beats up his opponent and then says, come and negotiate with me. That is not the behavior of somebody who does deals. It's the behavior of a mafia boss.
Well, Anthony, of course, Radhika mentioned about the decoupling. Many people would describe the U.S. policy, U.S. trade policy on China as one pursuing decoupling from the Chinese economy. Do you think there will be effects that somehow the two countries will further be decoupled because of the high tariffs?
There's no doubt that there is going to be a step in that direction. It won't be complete, but it'll be a step in that direction. As to Professor Radhika's comment about the weaker dollar, that's certainly a good possibility. But at the same time, if you listen to what is coming out of the White House, they would not be opposed to weakening the dollar. In fact, there have been some strong rumors that they would like to see a Plaza Accord, something that happened during the Reagan administration where countries around the world got together and weakened the dollar. In this case, I don't think countries around the world are going to get together to support the United States for a weaker dollar, but the policies themselves may lead to a weaker dollar. And the reason why the White House would like to see a weaker dollar is because that makes the U.S. Goods more competitive overseas. So it's ironic that could happen and have a small benefit, despite the fact that these policies will have a negative impact on overall economic growth in the U.S. and have a negative impact on global economic growth. We saw that during the 1930s, and if these trade war escalations occur, we will see it again in 2025 and beyond.
Well, Anthony, if, let's say, a big if there is a weak U.S. dollar, will that, expedite, accelerate U.S. export probably, and then will bring in more investment and rebuild America and, then achieve the purpose of reindustrialization?
That's a great point because a weaker dollar does that. But as Professor Radhika pointed out, if there's a lot of uncertainty, a lot of countries are going to be very nervous about coming into the United States because they're not sure if the rules will remain unchanged or remain favorable for them to come in. And remember, like the talk about bringing all the auto jobs into the United States from Mexico. Mexico employs 1 million auto workers. And right now, we have a shortage of almost 500,000 workers that can work in the manufacturing sector. And so if all of a sudden you want to completely reshore, that's fine for some companies. But if you really try to reshore all the jobs from all the places that we have trade deficit, we simply don't have the labor force to be able to accommodate that. So I don't want to use the same term pie in the sky, but it's a pretty good statement to describe the goals, because even though the goals seem as positive, they're somewhat unrealistic because we just don't have the labor force to be able to produce all those products.
On that note, we come to the end of today's show. Many thanks to our guests. You can also watch us on the CGTN app on YouTube. Thank you for being with us. I'm Xu Qinduo. See you next time.